Okay, I'm going to make a quick video here about today's trades. I took 3 trades. They were all wins, but they were very small wins because I kept getting, stopped out when price moved against me. Profit stopped out, I should say. So today I decided to try something a little bit different than what I usually do. I decided to focus entirely on RSI divergence trades. And I'm sure you well know the idea behind RSI divergence trades is that you want to find a place where price is temporarily discounted way more than it should be, and that's where you get in. So the basic idea is that you determine the trend or you determine the support and resistance areas. In this case, I'm going to show you an uptrending stock which has support under it, various levels of support. I won't go into that right now, but I can show you on a chart also. But the basic idea here is just that price is trending up, and then you wait for a strong pullback where the RSI goes under 0, so it's oversold. Okay, RSI becomes oversold, and that's the first thing you're looking for is oversold RSI. Then you want price to continue back up, right? Continue its journey back up, and then smack down again under. It has to go under that oversold area on price, has to go under that, but be above the RSI reading that showed oversold. So when it turns around. So that's the second thing you need. You need price to go under where it was, but over on the RSI. And that's basically it. Then you just hop on and take it as high as you can. One way of selling would be, and it would have worked well for me today, but I didn't do it, is you can then sell when it becomes overbought. Or, you could, I don't know, scale out, do whatever you want to do. But essentially, that's the whole idea. And the idea really is to get a discount on your price so that you're getting the cheapest possible price you can get in an uptrend so that you can get a good deal. So today, using this theory, what I did is at the 9:30 open, price went climbing up pretty sharply. One of the first major pullbacks was here, and as you can see, this was really the first time since it started rising sharply after the open that it went into the oversold position down here. So I was watching that and waiting for price to come up and then come back down under, right, this price, right, which you did do right here. This right here, by the way, is a 4-minute 9 EMA band, and I can get into the reasons I do that somewhere else, but just know that that's kind of a pretty common support area. It just so happened that price did go down under the oversold area here to the 4-minute 9 and bounced. But I really wasn't looking at that. I was really looking at this. This is what I was focused on. I was focused on seeing that now that price had gone under, and look at this sharp pullback. That's a very sharp pullback, not uncharacteristic with the steep rise in volume with that. You'll see that it's kind of like it's kind of like this is where most people get in, and then the market makers try to shake you out down here. So when they shook out those traders, they did not take it under the oversold level, and it stayed above. So then that's where I got in, and then I took it here. But my mistake about this was that then it stalled here, and so I placed a stop somewhere just above my entry here, waiting for it to go up. But I kind of forgot that there was big news at 10 o'clock, and at 10 o'clock we had that news spike down and stopped me out break even, or for a tiny loss actually. So that was the first trade. So the lesson learned on that one is don't do this right before news. I took this trade probably 3.5 minutes before news. Not a great idea because everything's going to sort of consolidate before the news as people wait, they get out of positions or they don't add to positions or whatever, and they're just not doing anything while they wait for the news. So that's why that one really didn't work. The next one I took was the same kind of thing. After the news, things kind of went sideways, and then they started moving up, and then they moved down very sharply here into that big oversold position down here. So I took note of that, marked that on my chart, the lows of that move, and there was kind of a double thing here, but I was like, yeah, it's so close that I'm counting that all as one. So I didn't like take the bait and say, oh, it's higher, let me just take it. No, I was just in my mind, it hadn't really bounced at all after this first oversold area. So I just waited for it to put in another one just to see what would happen, and it kind of did stay down. It didn't really bounce too far. Then what happened was it started to slowly climb, and then it slowly started to pull back here, and that was enough for me to consider that a separate pullback. And as you can see, these last three bars were, on higher volume. See the higher volume there? So that's a signal also that something's about to happen. Maybe a pivot's about to happen. Look for that real high volume. So, which we did get here too, by the way. But again, I felt like these two were so close to each other in time that, these are only 5 second bars. So they're just so close to each other in time that I just consider this all one. So anyway, we came under, and here we're above the oversold area, well above the oversold area, and then we started climbing, and I got in here, and I took it up here, and then I got stopped out like somewhere down in here. So one lesson I took from this one is that not a bad place to sell would be when it gets to the overbought area, because that was like a swing high, that overbought section, and that would have been a great trade. I mean, it was still a good trade, but it would have been a lot better. Okay, so that was the second one. And then the third one, I was kind of noticing that I had marked off this area of a resistance up here due to this consolidation zone. And I was noticing that we had already bounced once off it here. And so as we got up to it again up here, I was like, man, it might be worth a short if I can get a divergence trade. So I noticed that we came overbought up here in this area. And then we came up right to that area that I had marked out prior of consolidation resistance, and we kind of had a strong reaction candle here, and we were under the overbought. So we increased on price, but we did not on RSI. So because it was such a strong pullback, I waited for a back test, got the back test here, sold it here, took it down here, and it just kind of went flat, went sideways, and I figured, well, if it was going to go down to oversold, it would have by now. So I basically just hopped out right somewhere around here, and then it was a good thing because it went up. So those are the three trades. A total today on the accounts was just $2,500. For all 10 accounts across 10 accounts. These were smallish trades. I didn't really put a lot of shares on them because this is kind of an experiment today that I was doing, and I didn't really want to, get too crazy with things. So I just took some small contract sizing and did $2,500 today. So that's basically it. I really like this, and I'm really going to keep watching these because I do enjoy doing these. Today was kind of an experiment. I think it was a pretty positive experience overall doing these divergence trades. I really like. There was one more that I almost pulled the trigger on, and that was this one. As you can see, the price was lower here, but when I looked at these two RSI readings, they looked identical to me. I wasn't zoomed in that much, but they just looked identical to me, which I didn't really like that. I really wanted the second one to be clearly higher. If you zoom in and you really take a microscopic approach here, you can actually see that it was higher, but man, not by much. So too bad though, because that was the trade that really took off. It really took off to the upside. As you can see, it just took off. It went up 62 to 105, about 45 points, which is pretty good. So anyway, that's it. I will talk to you later.